This is Akashvani. In the program Money Talk, now we bring you a discussion on key domestic indices surpassing 4 trillion and trading at all-time high, reasons and opportunities. The participants are Sushma Ramachandran, economic analyst, and Lalima Aneja Dang, anchor.
Welcome to Akashvani Studios, Sushma.
Thank you.
Well, Sushma, last Wednesday, market cap of stocks listed on the BSE surpassed $4 trillion for the first time ever, making India the fifth country after the US, China, Japan and Hong Kong to achieve this milestone. How significant is this achievement?
Well, it's certainly a huge achievement because India has always been seen as one of the smaller markets in the world. When you have international news in the television channels, global channels, reference is normally not made to Indian markets. The reference is made to Hong Kong, the reference is made to perhaps Australia or Singapore, but India doesn't come into the reckoning. In fact, that's fairly strange. They even talk about Shanghai, but Shanghai is a very much smaller stock market than India. So we are not considered as a very large market, but the fact is that we are. And this data now shows that India is the expansion of our industry, the expansion of our manufacturing sector, the large number of infrastructure projects that are coming up in the country, the large amount of foreign investment that is coming into the country. All that is combined to ensure that the size of the Indian economy is growing exponentially, one might say.
And we can say India has arrived not just in the space arena, not just in the global arena, but also in the economic arena.
And I think it's important to recognize that being an economic superpower, people talk of political superpowers or military superpowers, but the basis for any country to be influential in the world, to have a say in world affairs, is when a country has economic strength. If China has a very important role in global affairs, it is because it is known as an economic superpower. If the US, of course the US is the most important superpower, it is the biggest and the most powerful economy. And similarly with other countries. So India, having reached this stage of becoming very large economy, a very much stable economy with very fast economic growth, I think it is now going to play its due role in global affairs.
The Sensex today had a new record high, Sushma, of 69,296 and Nifty hit its lifetime high of 20,855. Is there any expectation of reduction in interest rate by the Fed anytime soon, which is being reflected in the Indian market?
I think the rise in the Indian markets that you've talked about is due to two factors. One, of course, you talked about at the end, is the Federal Reserve likely to cut rates. Number one factor has been the fact that you've had the existing ruling party, the Bharatiya Janata Party, has won state assembly elections in 3 out of 4 states. That implies that there is going to be, and this is the party which is ruling at the central government, well, there's a good chance that in the 2024 elections, this is what analysts are speculating. I mean, one cannot say anything positively, but speculating that in the 2024 elections, the same party would come back into power. Now, that, of course, implies that there will be stability in terms of the government. There will be continuity in terms of government policies. And this is something that the stock markets all over the world prefer: stability and continuity of policies that are positive in terms of investment and provide a stimulus to growth. The second thing is the factor that you mentioned. You talked about the possible rate cut. The Federal Reserve Governor has commented recently. He hasn't said it very directly, but in a very indirect way said that probably they have achieved their objective of containing inflation and it might be time to take a pause. And also the head of the Federal Reserve, that is Jerome Powell, he also has made some what is known as dovish comments, which have been interpreted to say that the Federal Reserve is likely to cut rates at its next Monetary Policy Committee meeting. So this is something that has enthused markets around the world as well as in India, because this is something the whole world, especially markets in India, have been waiting for, because if interest rate cuts are affected in the US, then you will have a greater trend of foreign institutional investors coming back to Indian stock markets.
Market cap stocks listed on BSE surpassing $4 trillion So, Ishma, does it also reflect upon the fact that now there is greater confidence in the country? We often complain that domestic institutional investors are not investing in our country, but now that seems to have changed, and there is a greater interest in investing in our country for the institutional investors and for the stock investors as a common man. Of course, that shows that there is greater confidence in the country. That also shows that past few years, ever since this new government was elected, a lot of policy changes were made. We had GST and we had screwing up all the loose ends, like MSME sector was tightened up, NPAs were taken care of. Is this the fruit of all the efforts that were put in the last few years? Can we say that?
Yes, certainly one can say that, because there have been a lot of policy changes over the last 9 years. And you've talked about the introduction of GST. Now, GST was introduced at a time when everybody said the country is not ready for it. And certainly there were difficulties in implementations. Initially, policies had to be revised constantly. But the fact is that it has stabilized far better and far more quickly than ever anticipated. And the kind of revenue that is coming in now, 1.7 lakh crores in the latest month for which we have data, is far higher than had been ever anticipated by those in the GST Council who formulated the policies. Then, of course, you talked about bank NPAs. Now, that was also a very serious problem when this government took over. And this is something that has taken several years to resolve. But now the banking sector is in good health, and NPAs have been contained. And in fact, if you talk about investment, if you talk about the stock market, the banking sector is one of the areas that retail investors like to focus on.
We also see that unprecedented, much of them, we can go on talking about figures, that much of the figures have been unprecedented, of which demat accounts, never before have so many demat accounts been opened. And that again talks about the investor confidence.
Investor confidence. I think one thing that must be mentioned is that at the time when the pandemic happened, you had the entry of a large number of retail investors, domestic retail investors into the market. It was, of course, I must say, a phenomenon that was reflected in other parts of the world also. You found that in the US also. And you had these very young people who had come in to make investments for the first time in the stock market. And this is a completely new category. You talk about demat accounts. There were lakhs and lakhs of new accounts were opened. Now, what was interesting was that these new young investors who didn't know much about the stock markets were relying for their expertise on online platforms which were giving advice on where to invest, where not to invest. And surprisingly, although, the economy was not doing well, we all know during the pandemic, whether it was India or the rest of the world, economic situation was dire all over the world. Our stock market was booming. It was rising.
Yes.
And these people who invested at that time got tremendous returns on their investment. And this kind of faith in the markets, which you talked about earlier, domestic investors in the country have retained their faith in the Indian markets when foreign institutional investors were leaving Indian markets and going back to more lucrative areas. Domestic institutional investors ensured that the market remained stabilized. So there has been a lot of faith put by the domestic retail investor in the Indian market.
Right. In the past 3 months, India's overall market capitalization has gained 8.82%, the highest growth among the top 10 markets. Currently, India contributes 3.61% of the world's market capitalization, which has increased from 3.37% at the beginning of the year. Can we expect this trend of positivity to continue in the near future?
Well, it looks like it. We just, over the last 2 days, we have seen the markets reach new highs, and expectations are that these will go even higher. Even foreign institutional investors, foreign investment agencies are making projections that the Sensex will zoom even higher. So there's now a faith, not just by the domestic investors, but by the foreign institutional investors. In fact, for the last 7 or 8 days, you have had a return of the FIIs back to the domestic markets.
Yes.
And the inflows have begun once again, which shows that not just the domestic investors, the foreign institutional investors are now coming back and retaining their faith in the market. So the outlook definitely is very bright.
Is positive, yeah. There is a buzz in many corners that K-shaped recovery is happening in the country. What exactly would you mean by this K-shaped recovery? Is it true that it's actually happening in India?
Well, a K-shaped recovery would imply that, as K means you go up and then you go down and then you go up again. So it implies that the economy starts to recover and then it declines. There's a dip. And then again, it revives once again. As opposed to what is known as a V-shaped recovery. That is, the economy has fallen down as during the pandemic and then it continues to rise. So there's no second dip as there would be in what is known as a K-shaped recovery. Now, there is controversy over this issue. Some economists insist that India has been going through a K-shaped recovery. But if you see the growth rate for the current year, it clearly shows that, we had 7.2% growth in the last fiscal. The first quarter of the current fiscal, that is 2023-24, is 7.8%. The second quarter is showing 7.6%. So there is a continuous upward graph. So it has not been as anticipated, as I said, a K-shaped. It's not that it went up and came down. There is a continuous upward graph as of now. So, of course, we have to see what happens. But so far, the economic indicators are looking quite positive.
We've had to face COVID pandemic times. We also had just barely were we coming out of the pandemic. We had to face the geopolitical tensions, Ukraine, Russia, and then now this again, Israel-Palestine war. When you compare ourselves, that is compare India with other countries, we've had it pretty good. I mean, we see the inflation compared to US and Europe, we are still very much okay. We are still fine. What are the factors you think that the government has taken in the policy making that has kept us in such good condition?
I think there are multiple factors. And I think one, you go back to the time of COVID when the government prepared packages to revive certain sectors of the economy. It was at that time that the focus was kept on infrastructure. And at that time, there was considerable criticism that even for the MSME sector, the government had not given any direct subsidy or incentives. They had actually given rebate on loans and credit facilities. So the fact is that India being an economy with a limited availability of resources, the idea at that time was to utilize the resources in the most optimal fashion. Other countries, developed countries, were giving virtual handouts, whether it was to industry, whether it was to their population. But India did not do that. India focused on the classic economic model, focusing on infrastructure, and putting the funds in that sector. The second thing is, as far as inflation is concerned, which spurted last year after the Ukraine conflict, the government has not allowed energy prices to go up. Retail fuel prices have been contained. They have subsidized prices. And fortunately, we were able to then buy oil at much cheaper prices than the market. So the energy prices have been a factor in global inflation. So there, that has been contained. The Reserve Bank has also played its due role, in containing inflation. So the government and RBI have been working in tandem. So these are the major policies, I would say.
When geopolitical tensions were happening, China was in a tight spot. Do you think we took some wise decisions at that time? So China's loss was gained by India and Vietnam. Many of the companies, they moved from China to India, investing in India. Yes. Add to that all the reforms. Do you think that was a wise decision, a good diplomatic decision, as well as a economic decision?
It was a excellent decision, both diplomatically and economically speaking. And so many companies shifted in a big way to India. Of course, it will take a long time to reach the production levels in China, but the incentive to companies coming here has certainly made a difference, and it was, as you say, a very wise decision.
All right. Thank you, Sushma, for joining us in Akashvani Studios. We hope that this positivity that we have achieved in the Indian markets continues. Thank you very much.
Thank you, Lalima.
You were listening to a discussion on key domestic indices surpassing 4 trillion and trading at an all-time high, reasons and opportunities. The participants were Sushma Ramachandran, economic analyst, and Lalima Aneja Dang, anchor. This program was produced and presented by the News Services Division of Akashvani. You can listen to it on our mobile app News on AIR. This program is also available on our YouTube channel News on AIR Official. You may share your feedback about the program through email at airnsdtalks@gmail.com or WhatsApp on 9289094044.